Good afternoon, everyone, and welcome again to the fourth in a series of monthly webinars for managing brokers and associate brokers, focusing on the Real Estate Council of BC's new regulatory resources. Before we get started, just a couple housekeeping notes. Today's webinar is scheduled for an hour, but we may be briefer than that, so we'll try and get through the agenda efficiently. And your microphones have been muted. You are welcome to use the chat function to make comments, but if you have actual questions, please go ahead and use the Q&A function at the bottom of the screen and not the actual chat box. There will be time at the end for a question period where we'll answer just as many questions as we can get to. And lastly, we will be recording today's session and posting it on our website. Next slide, please, Sandra. First, let me just introduce myself. I'm Carmen Defoy. I'm the Manager of Practice Education and RecBC's Education Department. And for those that may have missed our announcement last week, we are excited to confirm that the new regulatory resources are now available in the knowledge base. So huge project and really exciting to see it actually be live and on our website. So let me start by giving you just some background information. As you may be aware, over the course of the past 2+ years, many groups and individuals have meaningfully contributed to the project, to the review and update of the content in the Professional Standards Manual and the Brokerage Standards Manual, as well as the RecBC clauses. As I said, this project was a big team effort. OSRI, UBC, legal counsel, both internal and external, the residential tenancy branch, and many other regulatory bodies and organizations were involved in assisting us with this project. You won't be hearing from me very much today. Instead, it's an absolute pleasure for me to welcome my colleague and introduce our speaker, Brian Remington. He is the Senior Manager of Policy and Oversight with the Office of the Superintendent of Real Estate. So with that, thank you, and over to you, Brian.
Awesome. Thank you, Carmen. I'm looking forward to discussing this interesting, albeit challenging topic with you all today. I'll try to make it as exciting as possible, but no promises. As a reminder, we'll be reserving a bit of time at the end of the presentation for questions. So if something comes to mind while I'm chatting, feel free to enter it into the Q&A box and I will try to get to it at the end. Next slide, please, Sandra. So today I'll start by providing you with an overview of what the PCM-LTFA is and the changes that are coming into effect on June 1st. Of this year. We'll talk about the resources and tools that can assist with your AML obligations. Then we're going to look at the topic of sort of working with consumers, which will cover seller and buyer clients and unrepresented party in this sort of AML context. We'll then look at some examples of a real-life floater search. I will then leave you with some considerations for managing brokers. Then Carmen will give you a preview of the June webinar. And finally, I'll turn it over to you for any questions you may have. Next slide. So today's presentation will focus on the changes to the Proceeds of Crime, Money Laundering and Terrorist Financing Act, also called the PCM-LTFA, which is a mouthful, which I'll probably mess up a few times today, as well as the tools you can use to assist with your obligations under this legislation. As you know, money laundering is a significant concern in British Columbia and Canada as a whole. Criminals may use real estate transactions to hide or clean sort of ill-gotten funds. So that is, making illegitimate money appear as if it came from legitimate sources. Real estate professionals play an important role in identifying and reporting suspicious transactions and can help maintain public confidence in the real estate industry. Now let's take a closer look at the legislation that is working to combat money laundering and the changes that are coming into effect, as well as how these changes will impact your role and responsibilities. Next slide, please. The PCM-LTFA is a piece of federal legislation that imposes requirements on financial institutions and other businesses and entities to assist in the fight against money laundering and terrorist financing. Canada's Financial Intelligence Unit, the Financial Transactions and Reports Analysis Centre of Canada, it's a mouthful, FINTRAC for short, is responsible for the detection, prevention, and deterrence of money laundering and financing of terrorist activities. So on June 1st of this year, which is coming in just a few weeks now, changes to the regulation under this legislation are coming into effect, And these changes are introducing a new set of obligations for you and the real estate professionals in your brokerage. And just to be clear, that while we mainly speak about the PCAM-LTFA as anti-money laundering legislation throughout this presentation, it's important to note it's also about anti-terrorist financing. It's just a mouthful to say that in every instance, so I'm shortening it. As just an aside too, on November 30th of last year, the BC Landowner Transparency Act came into effect. On April 30th of this year, the Landowner Transparency Registry became publicly searchable. This registry contains information about individuals that are deemed to have an indirect interest in land. And when I say indirect interest in land, I mean indirect ownership of interest in lands. For example, shareholdings in a corporation, if the corporation has an interest in land, or partnership interest in a partnership, beneficial interests of trust beneficiaries, etc. The registry's database, as we'll discuss today, is a useful tool that may assist you with your know your client obligations, as well as the verification of certain information from underneath the PCM-LTFA. So as stated before, this legislation is basically federal anti-money laundering legislation that gives investigative authority to FINTRAC. It imposes requirements on various reporting entities, such as real estate professionals and brokerages, developers. It also includes casinos, financial entities, BC notaries, etc. And these requirements are imposed to assist in the fight against money laundering and terrorist financing. As a reminder, real estate professionals have always had obligations under the legislation to, for example, identify warning signs and red flags for money laundering, to know your client. If you've ever had 2 or more transactions with a client, under this legislation, you will have formed a business relationship, which comes with specific reporting and monitoring obligations. You've also had to report suspicious transactions, report suspected terrorist property, and of course, report large cash transactions over $10,000 through a single or several payments if they were made within 24 hours. And just as a quick aside, the new changes are considering virtual currency as cash, so you'll have similar reporting requirements for large cash transactions if they're virtual now as well. Next slide, please. Okay, so now that we've reviewed your current obligations under the PCM-LTFA, let's take a look at the new requirements coming on June 1st. So the biggest one probably is the changes around beneficial ownership. So under this legislation, beneficial owners are the individuals who are the trustees, known beneficiaries, and settlers of a trust, or the individuals who directly or indirectly own or control 25% or more of a corporation or an entity other than a corporation or trust, such as a partnership. In other words, beneficial owners are the actual individuals who own or control an entity. Money launderers like to conceal beneficial ownership information so they can remain anonymous, which is why reporting entities like yourselves are now being asked to collect this information. As a real estate professional, when you confirm the existence of an entity, which is under the PCM-LTFA, a body corporate, a trust, a partnership, a fund, or an unincorporated association or organization, you are now required to collect and confirm the accuracy of beneficial ownership information. So this would include information that describes the ownership, control, and structure of the entity. So if the entity is a corporation, you would need to obtain the names of all the directors, as well as the names and addresses of all the beneficial owners. If the entity is a trust, you now have to obtain the names and addresses of all the trustees and known beneficiaries and settlers of the trust. And if the entity is not a corporation or trust, you need to obtain the names and addresses of the beneficial owners, so those who have 25% or greater control. And of course, you also have to take reasonable measures to confirm the accuracy of the information obtained and keep records of the information, as well as the measures you took to confirm its accuracy. So you may be wondering how you're supposed to acquire all this information. Well, FINTRAC thankfully offers a lot of guidance on this subject, but essentially there are a number of different methods that you can use. For example, you can simply ask the entity to provide you with official documentation. They can simply tell you the beneficial ownership information and you can just write it down for record keeping purposes, or they can fill out a document to provide you with the information. Just remember, you also have to verify the accuracy of the information that you obtain, and we'll touch on later how Loader might be a tool that can assist with this. But you can also simply ask for like a minute book, a shareholders register, board of directors meeting, records of decision, that sort of thing. So basically with beneficial ownership, the bottom line is when your client is an entity, you have to collect beneficial ownership information with respect to that entity. Next slide, please. Another change, the big one that's sort of coming, is how business relationships are formed. Now, a business relationship is defined as a relationship established between a reporting entity, so that would be you, a real estate professional, and a client. Now, previously, you entered into a business relationship with a client after 2 transactions. Now you are entering into a business relationship the very first time that you're required to verify a client's identity. So this happens when you have to verify a client when you receive a large cash transaction, a large virtual currency transaction, if there's a suspicious transaction, when you receive funds, or when you have to make an information record, so when you have to collect a client's name and address. Once a business relationship is formed, you have ongoing monitoring obligations, and these ongoing obligations last 5 years from the last transaction. So if you had a client, you worked with them once, 4 years later, they come to you again, you have another transaction with them, that 5 years now restarts. So you'd have an obligation for another 5 years to monitor that person. And once your ongoing monitoring obligations kick in, you have to sort of work to detect any suspicious transactions that are required to be reported to FINTRAC. You have to keep client identification information, beneficial ownership information, and the purpose and intended nature of the business relationship record up to date. And you have to determine whether transactions or activities are consistent with the client information you have and the risk assessment of your client. So next slide, please. Also note, when you enter into a business relationship, you're now also required to determine whether the person you're working with is a politically exposed person, a PEP, or a head of an international organization, an HIO, or if they have, a family member or close associate who's a PEP or an HIO. And basically, a politically exposed person or head of an international organization is somebody, who's been entrusted with a prominent position that typically comes with this opportunity to influence decisions and the ability to control resources. And this influence and control that a PEP has sort of puts them in a position that can make them vulnerable to corruption, according to FINTRAC. And that's why they're sort of now requiring you to determine if your client is one. Also, as a reminder, the timing for submitting a suspicious transaction report changed last year. So now reporting entities, you're now required to submit an STR, a suspicious transaction report, to FINTRAC as soon as practicable, whereas I think it used to be 30 days or 3 days you'd have, but now it's basically as soon as possible. The PCM LTFA has also been amended to require that all reporting entities, so that includes brokers, sales representatives, real estate developers, that they keep a copy of all reports submitted to FINTRAC. And finally, changes were also made to the various regulation schedules, and that sort of means that new forms are coming. They're not ready yet, but just keep an eye out on the FINTRAC website for any new forms. Next slide, please. So now we're going to take a look at some of the tools that you and your real estate professionals can use to assist with your AML obligations. Next slide. So as you are aware, or for those of you who may have missed previous RECB webinars, there are new regulatory resources available on the RECBC website, and they include regulatory information and guidelines. Now, guidelines are essentially, this practical applications of the regulatory information with RECBC's suggested best practice interpretations to sort of assist real estate professionals. Whereas regulatory information is easy to read explanations of the requirements for real estate professionals under the Real Estate Services Act, the regulation, the rules, and other applicable legislation. In other words, regulatory information is akin to sort of a plain language interpretation of the various pieces of legislation. Now, we have prepared regulatory information and guidelines on anti-money laundering, the Landowner Transparency Act, Land Title Survey Authority, and the Corporate Registry, and these will be available sort of mid-May, so very soon. The guidelines on AML are quite extensive, and they will help you understand the tools you can use to assist with your AML obligations, when you go about using these tools, and what you might do with the information you obtain. If the legislation changes, we will ensure that we update the information and guidelines accordingly. Next slide, please. So some of these tools are, of course, as everyone is aware of, the Land Title and Survey Authority search, which is this public search of ownership of lands, also known as, fee simple ownership, for which a title to land is provided. The Corporate Registry, which is a free company search. You have to have a BC Online account to use it, but it basically displays the company name, the number, the type, and the corporate history. And of course, we now have LOTR, the Landowner Transparency Registry, which is a registry of information about individuals deemed to have an indirect interest in land in this searchable public database. Now, these public searches are all tools that you can use to assist in fulfilling your brokerage's AML obligations. As a managing broker, you should ensure that your brokerage has a robust policy and procedures manual for the use of these tools, including how to identify red flags and when to report suspicious activity. It's recommended that you read through the AML regulatory information that we'll be providing, as well as the PCM LTFA guidance provided by FinTrack, to ensure that you have a thorough understanding of the requirements and obligations that affect real estate professionals and brokerages. Next slide, please. Now let's start by we're going to talk about sort of working with consumers and the various interactions you might have with the different types of consumers you're going to be working with. But let's start by playing this short clip from a training video that we put together depicting a scenario that you may encounter when working with a buyer client. The video sort of showcases how to talk about your AML duties to your clients in order to build this professional working relationship. Now, we'll also have a full version of this video coming out soon, which you can sort of use as this training tool and resource for real estate professionals at your brokerage. The full video will be shared in the next broker's brief, which will be available on the RECBC website. So let's play the video, please.
Omar, a real estate professional, was contacted by Alice and Jacob. They wanted him to represent them in the purchase of a new property. After discussing the terms of their relationship, Alice and Jacob have agreed to enter into a buyer's agency agreement with Omar. We're excited to start looking for new properties. Could we schedule some viewings for tomorrow? Omar explains that he'd be happy to show Alice and Jacob around the properties of interest. Before we get started, I need to get to know you and understand more about your needs. I'd also like to talk to you about the obligations I have as a real estate professional with respect to anti-money laundering. Here's a form that I need to review with you. Let's start by getting your government-issued photo ID, and we can go through the form together. Don't worry, I know this is sensitive information, and it's kept confidential unless I'm required to provide it to the federal regulator. Omar.
All right, thank you. So while the video is not ready yet, I'm going to provide sort of a bit of an overview of its content, so you can decide if it's sort of a resource that might be assistance later. So basically, the video is going to look at this typical interaction between a buyer client and a real estate professional. It's aiming to provide advice on how a professional might explain their anti-money laundering obligations and how they might request the required information to know their client. So first, the video really stresses the importance of being prepared, speaking about your duties clearly and professionally to prevent any misunderstanding and to address any concerns a client might have providing this, potentially sensitive information. It's okay to explain to your client that you're acting in accordance with the guidance provided by the regulator and that you and the industry as a whole are sort of committed to preventing and deterring money laundering. By clearly outlining and explaining your duties and the regulatory requirements you're working within, you'll be able to sort of maintain client trust and have a better relationship with your client. The video also explains how a real estate professional might go about knowing their client and how they discuss searching the loader registry. In this case, it's sort of important to alleviate any concerns by reiterating the fact that you are collecting the information in accordance sort of with the best practice outlined by the regulator, and that this new request for information is merely a routine and standard part of any transaction, similar to the practice of performing a title search. Finally, the video sort of explains what the real estate professional is to do with the information provided by their client, how they might speak with their client about what they found and what they should do next. Ultimately, it's about knowing your client and using the information they provide you with and the information that you might discover through a public search just to help determine if there are any inconsistencies in the information as a whole. Real estate professionals need to be alert to any discrepancy and be prepared to discuss what they find with their client and their managing broker in order to determine if a suspicious transaction report needs to be filed. So, if this sounds like something that would be of use to you or the real estate professionals in your brokerage, keep an eye out for it on our website when it goes live. Next slide, please. So let's talk about how you'd work with sort of buyer clients to fulfill some of your AML obligations. So when working with a buyer client, you are responsible for identifying clients when you, again, receive funds, when you have to make a client information record, when you get a large cash transaction of $10,000 or more within 24 hours, now virtual currency transaction as well, and when someone attempts to conduct a suspicious transaction. There are a few exceptions to this. For example, you don't need to re-identify a person or entity if you previously did so and have no doubts as to who they are. You do not need to verify the existence of public bodies or very large corporations or trusts or their subsidiaries or funds received directly from a financial entity. And you don't need to verify the entity of a person or if you believe doing so would inform them that you're submitting a suspicious transaction report related to them. So as our video is going to demonstrate when it's ready, there are tools available that can assist with fulfilling these obligations. It is recommended that you perform these searches on your buyer client when you enter into a buyer's agency agreement, or if no agreement is entered into before writing an offer. Now, prior to performing a loader search, you should ask your client, if they have any unregistered interest in land in BC, and advise them that you'll be searching loader to verify this information as part of your AML obligations under the PCM-LTFA. If your buyer client is a corporation, you should also perform a corporate registry search, and this is intended, to help you collect information on the corporation and confirm whether you're working with someone who has the authority to transact on behalf of the corporation. Next slide, please. So with seller clients, you have the same responsibilities for identifying clients, the same scenarios apply. And in order to assist with your obligations when working with a seller client, you should perform a title search on the property, perform a loader search on your client's name, perform a loader search using the PID of the property, and perform a corporate registry search if your client is a corporation. So it's recommended that you perform these searches when your brokerage enters into a listing agreement with the client. Prior to performing a loader search, same as with the buyer, you should ask your client if they have any unregistered interest in land in BC and advise them again that you'll be searching loader to verify this information. If the title search reveals that the property is owned by an entity, you should also perform a corporate registry search on that entity that owns the property. And this again is done as a means of assisting in the collection of information and to ensure again that the individual has the authority to transact on behalf of the company. Next slide, please. So with unrepresented sellers, it's a little bit different. we'd recommend that you perform a title search on the property, that you perform a loader search on the seller's name and on the PID. And if the seller is a corporation, you should also perform a corporate registry search. So if you're representing a buyer client, you should perform these searches on the unrepresented seller prior to writing an offer. In this situation, your PCM-LTFA obligations with respect to this unrepresented seller would be the same as if the seller were your client. A loader search of the seller and the property may assist you in fulfilling your beneficial ownership information collection obligations. So if your client is an entity, and it may also help you identify money laundering red flags that may aid in your determination as to whether a suspicious transaction report needs to be filed. Next slide, please. With an unrepresented buyer, you should perform a loader search of the buyer's name. And if the buyer is a corporation, we recommend you should perform a corporate registry search as well. So if you're representing a seller client, you should perform these searches on the unrepresented buyer prior to your client entering into a purchase agreement with them. Again, you have the same client identification obligations under the PCM-LTFA with respect to the unrepresented buyer as you would if they were your client. You must take reasonable steps to identify the unrepresented individual, confirm the existence of an entity if applicable, and screen and identify whether the transaction is suspicious. You're also required to collect beneficial ownership information if the unrepresented party is an entity, and utilizing loader in this instance, it might assist you in fulfilling these requirements. Next slide. So now we're going to look at some examples of what a loader search actually looks like. Next slide. Thanks, Sandra. So here is an example of what an individual search result on loader looks like. Now you'll see here that with the initial unpaid search, you will see the last 3 digits of a PID associated with the name you search, as well as the city principal residence. The information that is hidden is available for purchase, but for the purposes of identifying any potential interests, the free search is sufficient in most instances. The tricky thing about the loader search is with common names, you may not be able to determine if the individual listed in the results is actually the individual you're searching for. So if your client has a very unique name, it's probably fair to assume that if you get a result, it's probably your client. But in some cases with a common name, you're just going to have to take stock of the information you find and use it as part of your risk assessment process. Just a reminder, what you're looking for here is red flags. So that is discrepancies in what information you've been provided. It's okay for your client to have an indirect interest in land, but if your client is evasive about providing you with this information, inconsistent in what they're telling you, or if their story or source of wealth doesn't line up with their interests, there might be something going on. So as an example, if you have a client who's a senior and they tell you they want to downsize because they have limited income, but they have 5 LOTA interests in property in Vancouver, that could be a possible indicator. So therefore, you're going to have to use your professional judgment, look at the context of the transaction, and all of the indicators, warning signs to determine if a suspicious transaction report needs to be filed. Another reminder is that the results in the search are not going to show registered interest in land that would appear in a title search. So if you search for my name, given I'm a poor government employee, you will not see any results in the loader search. If you did, it would be a red flag because I have a fairly unique name and I don't have the means to have any other loader interests. So next slide, please. So this is now what it looks like if you pay for your results. The search fee is $5 for each result. So if you want further information, you choose to purchase it, this is what it's going to look like. The information you're going to see here will have the full PID associated with the individual's name, as well as their citizenship, the type of interest they have, and associated reporting body. Next slide, please. Here is an example of what a corporation search on loader would look like. So you'll see with the initial unpaid search, you're going to see the last 3 digits of a PID associated with the corporation name. Next slide. And this is the paid result for a corporation search. It's going to provide you with the office addresses, the jurisdiction of incorporation, the continued jurisdiction, and PID for the respective property. Next slide. And this is what an example of a PID search is going to look like on Loader, an unpaid one. So for corporate reporting bodies, you'll see the first two letters of the company name. The rest is going to be redacted. And with individual reporting bodies, you're going to see the first letter of their name and the rest will be redacted. In this particular example, there are two different reporting bodies with an interest in this property associated with this PID. So if you wanted to see the interest holders associated with this PID, you're going to need to purchase the information on both reporting bodies. And then next slide. And then if you did end up purchasing the results on one of them, this is what it would look like. You'll see the information included here. We'll have the full PID number associated with the corporation name, as well as the registered office address, head office address. It's also going to show the jurisdiction of incorporation, and it also is going to show you information on the interest holders under that reporting body. So in this instance, we see Wayne Doe here is an interest holder in ABC Corporation. Next slide, please. So now we're just going to look at some managing broker considerations here. So next slide. So as a managing broker, you are going to need to identify the areas of your business that are vulnerable to being used by criminals for conducting money laundering or terrorist financing activities. Reminder that the AML obligations under the PCM-LTFA, they only apply to real estate professionals and brokerages that offer trading services. So that is purchasing and selling real estate. They do not apply to property management activities. The following are some things that you should be reminding your real estate professionals to ask and think about if they become concerned about the possibilities of money laundering. They should be asking questions such as, have I seen any warning signs or indicators? What do I know about my client or the unrepresented party? Have I fully disclosed the situation with my managing broker? Should I or my brokerage file a suspicious transaction report? What is the threshold for reporting? Remember, it's reasonable grounds to suspect, not just suspicion. So you need to have a bit more evidence than just a hunch, like I don't like this fella, he seems shady, sort of thing. If I go ahead with the transaction and it emerges that money laundering was involved, what will the impact be on the profession itself and my professional career? So those are some of the things to think about. Ultimately, I would really stress that money laundering is a possibility in any real estate transaction, and any potential red flags or indicators should be closely examined and taken seriously. Next slide, please. Thank you. So if a real estate professional or brokerage does not comply with its PCM-LTFA obligations, one of the potential impacts is possible investigations and sanctions by FINTRAC and/or RECBC. Another possible impact for failing to comply is reputational harm to the real estate professional, the brokerage, and industry through negative consumer reviews and complaints to the media. Just a reminder that FINTRAC has recently levied fines of $66,742 on Park Georgia Realty in Vancouver. They cited 5 violations related to documentation and training. For example, Park Georgia Realty failed to develop compliance policies and procedures that sufficiently covered their requirements, failed to include the frequency of how training would be maintained on an ongoing basis in its training program, and failed to keep prescribed information and client information and receipt of funds records, just as a few examples. FINTRAC also recently levied a fine of $31,350 on Remax All-Stars Realty in Unionville, Ontario, for not complying with Part 1 of the Act and its associated regulations, and they failed to provide the requested compliance program documentation for purposes of a compliance examination. So there are sort of consequences for failing to comply with this legislation. Next slide, please. So as well as reminding the real estate professionals at your brokerage to be aware of potential red flags and to ask questions if they become concerned about the possibility of money laundering, you should also have robust policies and procedures around the use of the tools that have been mentioned to fulfill your AML obligations under this legislation. As you know, as a managing broker, you are responsible for your brokerage's compliance program. As part of your compliance program, you must develop policies and procedures that you apply to assess any money laundering terrorist financing risks in the course of your business activities. And if at any time you think there's a high risk of money laundering terrorist financing, you must also have enhanced measures in place. Now, FinTrack has released some very thorough sort of risk assessment guidance in January of this year. That's going to help you understand the types of money laundering terrorist financing risks you may encounter, as well as what a risk-based approach is and how you can use one to conduct a risk assessment of your business activities and clients. Some of the other things that your compliance program should cover are, know your client requirements, business relationship and ongoing monitoring requirements, record keeping requirements, reporting requirements, and travel rule requirements in relation to electronic funds transfers and virtual currency transfers. Just a reminder, check the FinTrack website on the full scope of information that should be in a compliance program, and for more specific information on risk assessment procedures and reporting record keeping requirements. So thanks, everyone. I'm going to hand you now over to Carmen, who's going to give you a preview of what to expect in June's webinar for managing brokers.
Thank you so much, Brian, and hats off to you for saying PCML TFA so flawlessly so many times. So good job on that. And hi, everybody again. So before I hand you back to Brian for the question and answer section of the webinar, I'm just going to give you a quick preview of the next webinar, which will be in June, and will focus on the risks in an active market and your professional obligations to report licensee misconduct. So next slide, please. In the current highly competitive real estate market, buyers and sellers may feel under pressure to act quickly. In the first 3 months of 2021, RecBC has seen an increase in the numbers of calls and complaints we receive from real estate consumers. Next month's webinar will be held on June 24th and will focus on reminding real estate professionals of their duty to act with care and skill and to provide services that meet high standards of professionalism and ethics. So please look out for more details and the registration link in the next broker's brief, which will be sent to you next week. Thank you, and back to Brian.
Thanks, Carmen. So we prepared sort of 3 questions for you, sort of based on some of the most common concerns that we have heard from industry members. We're going to start with these, and then we'll move into any questions that you, the audience, might have. Next slide. So question, will real estate professionals have to search LODR as they do the Land Title Survey Authority search? Next slide. So it's recommended essentially that they do so. It boils down, in my opinion, to due diligence. While there is no rule that says you must do a title search, if you didn't, and it turns out that the individual that you were transacting with didn't have the legal authority to sell the property, or there was an unknown owner listed on title, or a lien or bankruptcy on title, you could face discipline under RESA for not doing your due diligence. The same would apply to a LODR search. If it came to light that a transaction that you were part of was tied to money laundering or terrorist financing, and there was clear indications of such activity available through LODR, but you didn't follow best practice recommendations of searching the registry to know your client, the potential for discipline under RESA does exist. For example, you could be seen as sort of bringing the industry into disrepute. So next slide. Okay, so should real estate professionals keep LODR search results in listings/sales files? Next slide. Short answer, yes. Just as you would retain other information, a real estate professional should include the LODR search in their transaction file. With money laundering, it's going to be important to sort of build a case. A single indicator of money laundering activity is generally not going to be enough to reach this threshold for reporting to FinTrack. But you will want to make a record of any such indicators because your relationship with the client may change and because you're now required to do ongoing monitoring for virtually all of your clients. However, while you should keep a record of a loader search, we do not expect you to include this information in any marketing material. Next slide, please. Okay, last question here. If you discover that a property has a beneficial owner who is not your client, does that person then become your client? Next slide. So the short answer is no. If you discover through a loader PID search, so you're searching the property on loader and you discover that another party has a beneficial interest in the property, you just need to look at that information to see if it raises any money laundering red flags, to see potentially if there's any conflicts of interest at play. But that party is not your client and you do not owe them any fiduciary duties at all. In such a case, though, you should also make sure that you perform a title search, just to make sure your client has the legal right to sell the property, but basically that client or that person, is not going to become your client. So let's now move into some questions. I think we have a bit of time here. So just go ahead. If you do have any questions, don't use the chat, use that Q&A function at the bottom of your screen. And bear with me, this is one of the first times I've ever done this. So, okay, so first question here. Do property managers, rental brokerages need to collect the new information on corporations pertaining? So under the PCM LTFA, they are only concerned with sort of purchases and sales right now in terms of money laundering. So property managers, rental managers, they don't need to worry about the AML obligations under this legislation at this time. How does the licensee monitor the client for 5 years after the sale completed? That is a good question. Basically, what's going to have to happen is the managing brokers in their compliance sort of programs are going to have to come up with some sort of scheme for monitoring clients now after you've had a transaction and you've entered into this business relationship. And that is going to be based largely on the level of risk that client poses. So for example, if your client is a politically exposed person and they are at a higher risk of money laundering, terrorist financing activities, for that person, you probably want to have a more robust monitoring procedure in place. So maybe you're checking in on them a couple times a year, seeing if they've purchased any new real estate, running a loader search on them, potentially making sure your information's up to date. But with your average, first-time home buyer, someone who's very low risk, it might be very simple. Like you might just have to check in on them once a year, just verifying that nothing has changed, contacting them, reaching out, asking for some basic information just to make sure your records are up to date. It's just going to depend on the client and the risk level they pose. And yeah, I think FINTRAC offers a bit of guidance on this, on the ongoing monitoring obligations, so you'll probably want to check there as well. Where can I go for a sample policy and procedure manual for compliance? I do not have an answer for you there. I don't know if Carmen or anyone knows. FINTRAC provides a lot of guidance on what should be in policy and procedure manual for compliance, but I don't know if they actually offer a sample guide.
I can jump in there. To my knowledge, Brian, you are correct. I don't know that they provide a sample guide, but as Brian says, they have quite robust guidelines on their website that might help you to put one together.
Okay. Does a company search from BC Online work for collecting beneficial interest? So with the various searches, you're going to want to look at what FINTRAC is requiring you to collect. And I'm pretty sure the company search is going to provide you with some of the information that they're going to be looking for, but definitely not all of the information, especially with beneficial interest holders, because a company search is going to show you the information on that company. But if there are any beneficial owners who have an interest in that company, so a share of say 25% or more, the corporate search isn't going to provide you with any information on those people. So you can run a loader search on that company potentially, or through the PID search to get a list of all the interest holders. And there might be some information in there that you can collect. But in most of the cases with beneficial interest holders, you're probably just going to want to ask your client for that information. Use Loader to maybe verify some of it. And also potentially asking for different materials, like I said before, like minute books, records of decision, documents from them that you can say, yeah, I checked out what they told me. It lines up to some of the documents they gave me. That's kind of all you can do in that case. Are we required to do a Loader search on all buyers? Again, there's no rule that says you have to, but we are sort of recommending that you do a Loader search on all buyers at this time. I think just to do your due diligence, make sure there's no money laundering red flags, indicators, that sort of thing. Let me see. So I'm just reading through this question here, since we're an offer. Sorry, that one might be a bit complicated here to answer this time. I might have to get back to that one. Let me try a different one here. Are we required to do this on all of this on a returning existing client, either seller or buyer? Again, I think under the legislation that we're talking about here, if you are sure in terms of identifying your client, if you've already identified them in the past, you don't have a requirement to identify them again if you're sure that you got it correct the first time. However, we are still recommending that you sort of keep looking, that you sort of maybe perform a Loader search, check in to make sure your information's up to date, just to make sure that there are no money laundering red flags. And if everything is the same, that's kind of all you have to worry about at this point in time. I think with all of this, with all of the work we're asking you to do in terms of knowing your client, looking for money laundering red flags, it's just all about building sort of a case file almost. I would just akin it to sort of is you're looking for a bunch of things, because with money laundering, it's usually not one indicator, it's a series of indicators. My client is sort of acting a bit elusive, being shady, not wanting to provide me with information. They're changing their story whenever I ask about certain information, whenever I ask them to clarify certain things. They're not able to provide me with a story that sort of makes sense. Their situation, their financial situation doesn't sort of match up with what I'm seeing in terms of what interests they have in Loader, that sort of thing. And if it builds up and you start to begin to think, okay, there's a lot of indicators here, I think actually that maybe money laundering is happening in this case, then maybe I would just have a conversation with your managing broker, look at what's in sort of the compliance program. If it looks like you have to submit a suspicious transaction report, then by all means, sort of write up a suspicious transaction report. And in some cases, if it's very clear that money laundering is occurring here, I would probably sort of recommend that you cease working with that individual, because just for your own sort of professional obligation duties, it wouldn't look very well, I think, if it was ever came to light that person was a money launderer and you proceeded in a transaction with them and helped them launder money, essentially. So yeah, just be careful. And we'll just maybe do a couple more questions here. Okay, maybe I heard this wrong. Did you say pull all the corporate docs, Loader docs, before listing a property, or do you mean at the time a deal is written? So yeah, with the seller, we're sort of, before we enter into a listing agreement with them, that's sort of when we're recommending that you start to do your know your client obligations and duties and start looking at the Loader information and doing the corporate registry if your client is an entity. And For real estate professionals outside of trading services, you mentioned that they are not captured under the PCM LTFA. Would you suggest that they report suspicious behavior encountered using FINTRAC's voluntary information reporting option? Carmen, would you be able to chime in on this one? I would probably recommend that they would if they see something suspicious and there is a voluntary information reporting option.
Yeah, I echo kind of Brian's sentiment on that. I would think that, you know, if you're seeing something that's giving you concern, it's probably always best to report that to FINTRAC. A worst case scenario, if it's not something that they can look at, it's not something they can look at. But if we're speaking even about just professional and ethical obligation to if it's getting your spidey senses up, perhaps it's something you might want to bring to FINTRAC's attention. On that question, I think we are just about running out of time here. So I think we're going to go ahead and probably say goodbye. And I just want to take the opportunity to thank Brian immensely for his wonderful presentation. You did a wonderful job. And as I'm sure you all know, this is very dry stuff sometimes. And I think you did a great job of actually making it really interesting. So thank you to Brian very much. And thank you to all of you for attending. And we look forward to seeing you in June.
Awesome. Thank you, everybody.
Bye-bye.